Welcome back to the cryptowrld channel, everyone. My name is Josh, and we have just seen the first daily candle close below the September low, which means we need to be focusing on some other important levels of support here in the shorter term for Bitcoin. And so because of that, does that mean we are now in a bear market, or are we still possibly in a bull market? So later in this video, I will be talking about that alongside some other important Bitcoin charts. And I will also be taking a deeper dive into the NASDAQ 100 towards the end of this video, which is one of the primary reasons driving the pullback in crypto. So definitely make sure you're sticking around to the end of the video so that you don't miss out on any of this important information. And just before we jump into it, you might as well leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight into what this video is about. It's right here on the Bitcoin US dollar chart on the daily time frame. And we've got our Fibonacci levels here on the logarithmic chart using the logarithmic settings. And after seeing yesterday's daily candle close, we have officially closed below the golden pocket and the September low, which is obviously more of a bearish signal than it is a bullish one. And so if you're simply looking at some lower Fibonacci levels, for example, the 78.6% Fibonacci level on the logarithmic chart right here, that is coming in at around 35,000 approximately. So for now, 35k is one important level that I am looking at as some possible support for the Bitcoin price. But if we see a daily candle close below 35k, then in that case, that could technically increase the chance of Bitcoin heading down towards the July lows again, as in around 30,000 US dollars per Bitcoin if we see a confirmed break below 35k. And obviously there is a lot of factors at play inside and outside of the crypto markets that is causing this downturn. And I will be talking about that later in the video in terms of the NASDAQ right here. But what's one method that we could use to be confident that the Bitcoin price is potentially bottoming out? Well, as I mentioned in yesterday's Bitcoin update video, I'll be paying attention to the volume indicator here on the weekly time frame. And more specifically, what I'll be looking for is a major spike in the volume indicator here on the weekly chart, which as of right now, if you're looking at the volume indicator for Bitcoin in the recent price action, we have not seen any major spike, meaning that I am not actually confident that we have bottomed out at least just yet. If you're simply taking a look at all of these major market lows and major market highs for Bitcoin, almost every single time we saw a massive spike or surge in the volume indicator here on the weekly chart, and that was due to a major liquidation event that was happening during those time periods. And when you're talking about a possible liquidation event, we need to be paying attention to the estimated leverage ratio for Bitcoin, which, believe it or not, even after seeing all of this bearish price action, the estimated leverage ratio for Bitcoin is still sitting at close to record highs. So what does that actually mean? Well, it means that we haven't actually experienced an extreme liquidation event as of right now. And so according to this chart right here, we are still building up to a massive liquidation event. And the longer this goes on, the bigger the liquidation event will be. Now, if you've been watching some of my recent Bitcoin update videos over the past 1 to 2 weeks, I have been comparing this price action to the price action that we saw back in June and July, considering both the current price action and that previous price action was trending to the downside while the leverage was trending to the upside. So they do have their similarities. And of course, last time that led into a short squeeze that we saw towards the end of July. But with that being said, it is still important to realize that there's technically a possibility that we could still see a long squeeze, just the same as there's a possibility of seeing a short squeeze. In fact, in some extreme scenarios, we actually see both a long squeeze and a short squeeze happen one after another. For example, if you're looking at the March 2020 crash, when you zoomed all the way out here on the weekly chart, that doesn't look like a massive crash, but believe me, that was one of the most severe crashes in Bitcoin's history. During that crash, the Bitcoin price fell by around 50% in one single day, and over around 3 weeks, we fell by over 60% to the downside. And what we saw towards the end of that crash was a giant long squeeze, a very fast liquidation event to the downside, which saw basically a very sharp move to the downside before a very quick recovery, which came next, which was basically a short squeeze happening after a long squeeze. And after we finally squeeze out all of that leverage in the market, which will happen eventually, whether it's a long squeeze or a short squeeze or both, it's very likely we'll see a lot of volume picking up here, which means it's very likely that after we see that happen, we could see the price turn around from there. But as of right now, once again, we have not seen that happen just yet, so get prepared for possibly some extreme volatility. But with that being said, looking on the 3-day time frame for Bitcoin, we are still technically forming that bullish divergence between the Bitcoin price and the MACD indicator. Obviously, we have a decent way to go before we see any sort of bullish cross here in the 3-day MACD, which means just because we're seeing this forming, that does not tell us the exact bottom or anything like that. And in fact, the last time we saw this happen was back during June and July 2021. And while we were seeing the bullish divergence form, we were still in a bearish trend for Bitcoin. But then it was the moment that the MACD indicator here on the 3-day chart flipped bullish. At that point, that was when we started seeing that short squeeze and flipping bullish again in the Bitcoin price, which once again, we are not seeing right now, but we are still potentially building up to that according to this chart right here. And now, just before I cover the NASDAQ chart, which is really important to pay attention to, I'll just quickly discuss the type of market that we're in right now. Obviously, there is no denying that over the past 2 to 2.5 months, we have been in a bearish trend for Bitcoin. But if you're talking about the larger market structure here, as in years worth of price action, are we possibly in a bull market or are we possibly in a bear market? Well, there's definitely a lot of debate going around at the moment, and that is because the definitions between the two, at least in the crypto world, are not very clear. And so because of the lack of clarity in the definitions between bull markets and bear markets in the crypto world, that is why there is a debate at the moment talking about whether or not this is a bull market or bear market. And so I am just going to share my opinion on what type of market this might be. Now, I am certainly not saying this opinion is correct. In fact, I'd like to hear what you think in the comment section down below. And so first of all, if you ask me the question of whether or not this is a bull market or bear market before we broke below the September low, then I would have said a bull market simply because we were making higher lows possibly, and technically we are still putting in higher highs if you're looking at these highs, or even if you're looking at these highs. So because of that, technically speaking, I would have called this a bull market until we broke below that September low, which means right now Bitcoin is finally forming a lower low compared to the September low. Now, we haven't seen a major lower high on the chart just yet, so keep that in mind. But as of right now, I would not be calling this a bull market, but I would also not be calling it a bear market. And that might confuse a lot of people out there, especially if you're new to the crypto market. But believe it or not, we don't have to be in a bull market or a bear market. For example, simply zooming out on the chart and taking a look at the 2019 to 2020 price action, that was around 1 to 2 years worth of price action where we basically saw the Bitcoin price almost go sideways, which means during that time period, during 2019 and early 2020, we did not see any major breakouts into a new all-time high. We also did not break below previous macro lows like the 2018 bear market low. And on top of that, during that same time period right there, we never saw prolonged price decline, as in 6 to 12 months worth of bearish price action like what we saw in the 2018 bear market. So when you're using all of that information and simply just taking a look at the chart during that time period, it's pretty clear to say, at least in my perspective, that that time period right there was not necessarily a bull market or a bear market. And so if you are simply using the same logic as we just used for that previous price action, right now we are in something similar where we haven't seen any major breakouts into a new all-time high. Of course, we've only gone a couple $1,000s above that previous all-time high that we set back in April last year, and we haven't really broken below that $29,000 low, at least as of right now. And on top of that, despite seeing some bearish price action over the past 2 months, we haven't seen any prolonged price decline, as in 6 to 12 months worth of bearish price action, which means if you're looking at almost the sideways tops and the sideways bottoms, we are in a similar sideways market, or an accumulation market, if you want to call it that, as we were in during 2019 and 2020, at least in my perspective. Once again, that does not have to be correct, and I want to hear your opinions on that in the comment section down below. Now, taking a quick look at the NASDAQ here on the 3-day time frame, and this is zoomed all the way out, looking at over a decade worth of price action. And what I've done here is basically highlight some of the major crashes that the NASDAQ has experienced over the past 1 to 2 decades, and also comparing what we were seeing in the 3-day RSI during those market crashes. Starting at the 2008 global financial crisis, obviously that was a massive market crash, and that brought the 3-day RSI for the NASDAQ 100 well into oversold territories, which in hindsight, if you were accumulating then and holding for the longer term, that turned out to be an amazing buying opportunity. And we saw something similar in late 2015 heading into early 2016, but of course nowhere near as severe as what we saw back in 2008. And then we saw a crash in the NASDAQ 100 during late 2018, which was also when Bitcoin was playing out its bear market. So as I have been saying, a lot of the times when Bitcoin is bearish, we usually see the stock market's bearish and vice versa. But if you're looking in the 3-day RSI in the 2018 crash, we did not quite make it to oversold territories, even though that still turned out to be a pretty good buying opportunity for the longer term. And then of course we saw the March 2020 crash, which was one of the most severe stock market crashes since the 2008 recession. And that saw the 3-day RSI for the NASDAQ 100 come right down into oversold territories, giving us an amazing buying opportunity for the longer term. And of course, Bitcoin was playing out a similar crash during that same time period. And then looking at the current day price action, of course, the NASDAQ is also experiencing another crash right now. And that is also bringing the 3-day RSI very close to oversold territories. We're not there just yet, but if you're looking here, we are getting very close to some of these previous levels that we've been at during previous market crashes. So obviously this does not tell us exactly when we're going to bottom out, but what it does tell us is it reveals some of the best buying opportunities if you are holding for the longer term. Of course, that is not financial advice. That is simply just telling you what this indicator means for the NASDAQ based on what has happened in these previous market crashes over over many years worth of price action. And the reason why this is important for Bitcoin and crypto is because we need to see the stock markets enter into some sort of recovery before we can expect a major recovery out of Bitcoin or crypto. And as of right now, obviously we have not confirmed a recovery, but we are potentially getting closer to one. So it's definitely going to be interesting to see what the stock market does when it opens up next week. And if you want to get extra updates on the markets throughout the day, make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. If you got anything of value out of this video, please make sure to leave a like down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. And as always, I appreciate every single one of you here on the channel. I can't thank you enough. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.